If you've been seeing those people draw red boxes in high places and green boxes in lower places and saying these are supply zones and demand zones, and you've been confused of how exactly it works, this video is for you. In this video, I'll be teaching you how to draw supply and demand zones, and not just how to draw them, but also how to utilize them to analyze the chart and make good predictions of where price may be heading for in the next direction, and possibly take good trades, better trades, and better results for yourself. Let's head right into it. So we're going to start with basically what is supply and demand. Supply and demand is very simple. It's something that is taught in economics. It's the same thing you've been learning since secondary school, university, and going on forward in life. Supply is the readily accessible, or rather readily available things that can be purchased by people in the markets, that can be given. For example, water supply. The amount of water available to be supplied, right? And then demand is the necessary need for that product, service, or thing, right? Basically, if you're in your own house, you, the person who wants to have water so you could bathe or drink, you are the person in demand, while the water board or the government or whoever is selling it is the supplier. Similar with what we already know. It exists in the real life. It exists also in trading. Supply is that a lot of orders, people selling, people who have the market, who have an order to sell things, are there. And demand is that a lot of people who have those things, who want that market, who wants to purchase that thing, are there. So with the understanding of supply and demand, what do you understand primarily by understanding of supply and demand in real life? In real life, let's assume we only have 5 liters of petrol in the whole world. The cost of petrol will obviously outpace the cost of gold by far, right? Why? Because there's 5 liters of supply and over how many billion people in need of it, aka the demand completely outweighs the supply, hence the price of that item becomes extremely expensive. If you flip that the other way around, let's assume there is so much fuel. Matter of fact, you could go to your tap, turn it on right now, and you have fuel, you have petrol. I'm using petrol because that's what is hitting the world hard right now. So imagine you could go to your tap, turn it on, and you have petrol. It becomes so cheap that nobody values it. Nobody's going to value it. Why? Because it's in excess supply. So what does this mean? Something has to be either in excess supply for it to be cheap, or it has to be in little supply for it to be expensive. Now, if you look at the price charts, this means that anything above price is rated quite expensive in the first place. Let's just use price as the middle line, right? Anything above here is expensive, anything below here is cheap. However, what does this also mean? It means if you're seeing the price chart print downward, what does it mean? There's enough, or there's too much supply of it that people no longer care. People are no longer buying this thing. We don't really like it anymore. We're no longer intending in getting this thing, to the point where it's getting cheaper and cheaper and cheaper. If the price chart is going upwards, it means, there's going to be scarcity of this thing probably. A lot of people are buying into it. There's a high tendency that there's buying going on. So it starts to go up, 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 up. Now, you've probably heard of demand zones and supply zones in trading. I'm going to take it all into trading. What are demand zones? What are supply zones? Demand zones are places where the orders suddenly came into, the buying orders. People who placed buying order. This is where they came into. This is the price range where a lot of buy orders came in, and then they superseded the supply available in the market, thereby making the price of that asset go up. A supply zone is where there was a lot of people ready to sell, more than the people ready to buy, so therefore the price started to drop. Now, with that knowledge in mind, let's take it into the charts and see what we can do with this. Now, this is the monthly chart for the US dollar against the Canadian dollar. And one thing you can see right here is at this point, this is the beginning of the fall, right? So everything around here, everything in this zone right here is basically a place where you see, there was so much supply for that item, right? There was so much supply for that item that it started to sink. Isn't that it? But this ideology works best in stock. This is currency. This doesn't mean that the US dollar was too much and people are buying all that stuff, or the Canadian dollar was becoming too sweet. People prefer to buy the Canadian dollar against the US dollar. What made people prefer purchasing the Canadian dollar compared to the US dollar. At this point, this is where fundamentals come in. However, this video is not about fundamentals. This video is about the fundamental of supply and demand. Whatever it is that happened in the news that made people feel like the Canadian dollar is now more valuable than the US dollar is why we end up seeing this here. So basically, everything here says that at this point, the Canadian dollar started getting some sort of more respect, or the US dollar started getting some sort of disrespect. Remember, we're dealing with base and quote currency when it comes to forex. Forex is not one asset. Forex is a comparison of two assets. You're comparing two major economies, or two economies per se, and you're measuring their weights of the economy standard compared, and then comparing it against the weights and standard of another economy, and you can only value that through their currency. So looking up here, what do we see? We have a supply zone right here. This is a zone where price seems to have gotten to the point where supply started to come in so much, or demand for the quotes started to come in so much. So when the quote demand starts to supersede the demand for the base, you start to sell. What does this mean? What is the quote? The particular asset we're trading here is US dollar, Canadian dollar. The main currency, the US dollar in this case, is not because it's the US dollar, it's the currency that appears first, USD. That is the base of those markets. And then the quote is CAD, that is the one on the left, the one that appears next. So the demand for the quote started to supersede the demand for the base, and that is why you see that price starts to go down. Whenever it flips the other way, price starts to go up. Whatever happened in this time in February made the Canadian dollar far more reasonable. And if you're not new here, this is February 2025 when we started seeing tariffs and the rest, the tackle trades and everything from the US dollar, Donald Trump's and the tariff and everything, and the Canadian economy became somewhere people prefer to go compared to the US economy at that point in time. That was then. Now supply exited. Supply superseded demand over here. Now down here, let's come down here. You see down here, you can see the same thing for this area, and then you also see that, oh, this area is where what happened. Demand. Let me zoom in a little bit. You can see at this area, you see, oh, demand started to come in so much that they couldn't push price lower, so therefore they went up. But if you draw supply and demand zones at random like this, you are most likely drawing it wrongly. So the next question is, how do you draw a supply and demand zone correctly? Well, it is simple. With the logic of what supply is, price starts to move in the opposite direction or continues to move in a certain direction after price meets it. You can start all the way from here. Let's start with the supply zone. So at this point, this is the main point where price got to and started to run away. So this is the highest price level price got to and started to run away from it. If you say this entire place is a supply zone, you are correct. You're very correct. Very, very correct. But this is what you are mistaken. The word you use is a zone. It means it has to be a range of price. If this is a range of price, then it is correct. Another zone to also look out for, or rather another way to look out for a zone per se, is to say, okay, this whole area, right, this whole candle here, what we notice is price went into this candle area and suddenly slumped hard. So we can say this entire body, because this is where price closed, price came down and pushed back up. So we can say this entire area is a supply zone. And it's all fine. It's still absolutely good, still very fine. Let's try the same for the demand zone. We can say this bottom right here is a demand area, right? It's a zone where demand started from. But at the same time, you can say again that price seems to have gone up and got pushed down, but it was at this point price refused to go any lower and started going up. So you can see this whole place is a demand zone. Now this is how I personally draw demand zones. Most people like to mark out the entire candle, but I don't see the need of marking out the entire candle when there was obviously strong fight going on here. I prefer to see this point where the power really took place as the point of focus. Now that you've known how to draw supply and demand zones, the next question is, how do you even use it? Well, it's simple. The thing about supply and demand zones is when price starts to violate a particular zone, you know that you should be heading against that direction. What do I mean? It's very simple. We're going to draw price in so many zones. Let's take, for example, I'll take this whole thing here. You see, this entire rejection to me is a very, very credible supply zone. Very, very credible supply zone. Why do I say it's a supply zone? To me. So this candle is bullish, first and foremost. Don't forget, it closed bullish. However, price started from the bottom, went so high, immediately got forced so low that it closed right here. So all the crazy sell orders are inside this area instead. Everything after this point is the reaction or is a fallout of what happened inside this area. That is why I aim for this instead. This week alongside with the close of this, the opening of this body. That is why I aim for the zone. Now, if you look from this zone down here, you notice how when price came back into this zone, price did what? Respected. Price went in and the same push is experienced here, it experienced here. But this is one thing you need to know. Like I said, when a zone gets mitigated or abused, it is no longer useful. So let's take a good look at it. When price came in here, price utilized this zone. So the zone is no longer, number one, the zone is not fresh. Number two, the zone has been utilized. It has been utilized, it has been finished, both mitigated and utilized. Now, if you look forward, when price came back here, what happened? Price is no longer giving us a wick. Instead, price is giving us a small fall to the downside. But what does this mean? All the orders here have been depleted already. If there are orders here, if you look carefully at this, what we can say is all this thing that happened was due to the leftover orders that were already here, alongside with some small new orders that came in to push price even lower. And then when you look here, what do you see? You can see that price, right? You can see that price is, you can see that the markets, or basically traders, are no longer seeing orders left here, except above this point. So what does this mean? This place has been invalidated. If this has been invalidated, this fall down here is literally just a pull back. It is no longer going to be called a move to the downside. The first time it happened, let me show you the first time it happened, right? It created this low. You can see it created this low, tried coming back up, created a new low. It did the exact same thing it did here. You can see the exact same thing it did here. I would validate this whole area as a demand zone personally, right? I'll validate it as a whole demand zone. But what happened? What happened? When price came back here, this happened, and price came to immediately violate this area, closing almost below it, almost nearly closing below it, but refused to close. What does this mean to me? This means one thing. There is most possibly new orders here, but I don't really care about this entire body movement because any order created by this candle has been negated by this candle. But you see the orders here. You see the orders here. The ones here. The ones on this bullish candle. They have not been completely negated. They are there. They will not move price hard anymore. It is no longer a strong zone, but it is a demand zone. And if you look at it, looking all the way from this point upwards, what you see are more of wicks available to the downside, more of those zones being respected. Like you can notice that they are not being taken anymore. You can see them, they are not being taken anymore. They are no longer being taken. So what do we have in this market? Which ones are being taken? We have the upper wicks, as you can see, with as much rejection this had, it was taken. As much rejection many of them had were taken. You can even see up here, with all the rejection this zone had, it was ripped through. So understanding this means, what you understand right now means that if this is just a pullback, then this is most likely one of the push to the upside. But this is not the zone to start pushing to the upside from. right? Why do I say this is not the zone? Okay, we are not certain. There's no such thing as this is not. This may not be. Why? Because when you look at this entire move from the lowest point to the current highest point, price is not yet in a discount zone. However, if you do the same thing from here to here, you notice price did not come down into a discount. I won't call this a full leg until this happened. Price has not still come down to a discount. Price could do the same thing, right? It could actually come in here and move higher. The higher it goes, the more the leg is drawn, the more the swing is drawn until price makes a good enough retracement. Then we'll call it a proper correction. But this is a correction, but not too much of a correction. So there's a tendency, right? As much as this market is supposed to be bullish on the monthly, there's a tendency that we may still see this before we see this. There's a higher tendency. Now, this is how supply and demand actually works. I'm going to show you an indicator which I personally created for myself, which I'm going to use to explain this market now for you in a very, very simple manner. So this is my indicator for determining supply and demand. It's going to come up in a second right there. Now I'm going to review this market on this place, starting from the monthly. On the monthly, what do I see? I see price breaking through demand supply zones. You can see the reds are getting violated. You can see the one I drew before getting violated. You can see this getting violated, and price is what's respecting more of the demand zones, even though this one got violated, but it's beginning to respect it again. So this tells me monthly I should be aiming for the upside. Let's go down to the weekly. On the weekly, what am I saying? Price just negated a demand zone. So what do I expect? I expect price to start coming down even further, just like I drew before. From this entire move to the upside, that is what I drew the first time, right? So let's do that again. From this entire move to the upside, I personally expect price to come at least below the 50% and heading into the well discount areas. At these areas, it can start finding orders to move upwards. So personally, on the weekly, I see a possible selling opportunities, more of selling opportunities. Now on the daily, what do? We dive down to the daily. What are we looking for? What is getting dismantled the most? What is getting invalidated? You can see demand zones are getting invalidated all here until we saw this pullback where supply zones start getting them invalidated. But at this point, it stopped getting invalidated and demand zones started getting crushed again. Now we have a supply zone. What are we looking at here? We're kind of like in a holdback right here, right? We're kind of like in a holdback. What is the holdback? Seeing that price is now invalidating supply zone, you could just wait for a while on the daily. If you're trading with the daily entry, you could wait to see if price is going to take out this zone or price is going to come, respect this zone and start coming back upwards. If price takes out this zone, you know you are in a selling market. If price takes out this, you know you are in a buying market. Now let's tilt it even further to the 4 hours. This is how I enter a trade. This is how I analyze the chart all the way to my time frame before I enter a trade. Now on the 4 hours, what do I see? I see price breaking below this supply zone, this demand zone. I'm going to take away this thing right now. You see a demand zone right here. As soon as price broke through it, you're going to apply. You're going to wait for either the price to retest, or you can just wait. As soon as price closes below it, you can hit the sell, stop loss above the last zone. Now it is a lot of money to place on the line, but what are we aiming for? We are aiming for weekly runs, right? We're aiming for weekly runs. And what are the weekly runs? We are aiming that price is going to find its way to the next weekly clear zones. Again, what is the next weekly clear zone? Right here we can see that we have this area where there's major demand. On the weekly, I'm going to put the entire view from here to here now. Again, we go back to that 4 hours and I'm going to show you what I'm saying. You see how much risk to reward you will have from just that one move. So if you entered this market, I actually traded this market, I'll show you, but I didn't come in early. If you enter this market upon the close of this candle, this was somewhere around 6 p.m. Enter this market and stop loss around here. What did you see we were aiming for? We're aiming for the clear areas of the zone, right? If I put my candle down here, I have a 1:5. So I'm literally making 1.5 times whatever I am risking just by entering this trade, if it works out. And you can see how far the market has currently gone. Now, like I said, I was actually in a trade in this market, so I'm just going to show you. I think this is it. Yep, so this is it. I traded it on the 1 hour because I had missed the market already. I traded it on the 1 hour, and when I'm trading on the 1 hour, I'm aiming for the daily instead, not for the weekly areas. Now, if you look at it, let's look at the daily. Where are my nearest demand zones? Where are the zones I call my nearest demand zones? You can see right here is my nearest demand zone. Anything below this 66.5% is already premium to me. It's already cheap to me. Sorry, I said premium. It's already cheap and easily buyable. Buy market should come in, or buy side should come in. I may lose that trade. And you can see what I did here was, as soon as I saw price breaking below zones for me, I should have come in long ago, right? But however, I made this chart late. So when I came in, see where I placed my order. I placed my pending order here. When I noticed price was going above, back to the top side, I placed my pending order, waited for price to come back to it, and as soon as price wicked me in, went back up and came in my favor all the way till it got into the discount areas. And at the discount zones, I simply step out. This was a 1 to 6.4. You will almost never get below 1.2. Almost never get below 1.2. So when you win, you're going to be winning more than you lose. If you're risking a steady risk amount, you're always going to be winning more than you lose. And you are most likely going to get a lot of consecutive wins. Why? Because in the market, it has been noticed that when price moves in a direction, right? When price moves in a direction, the pullback is always around. Let me just do it right here. If price moves in a certain direction in the market, the pullback is known to be always around, at least most times on average on the trending markets, is to come below the 50%, going into 38 points something, 38 points, I think 38.2%. So this is it. So if price is most likely going to come back here, and then you are now buying from these zones. So you're buying from these zones. Once you notice that on that lower time frame, you notice that small moves. As long as you start seeing supply zones getting invalidated, you can come into the market. You're coming into the market waiting for what? This is at 33.5%, right? You're waiting for what? You're waiting for price to come back into the premium. And we are doing what? Placing yourself behind supply demand zones at the back here. You can see how you almost never get below 1. Even if you do this, let's say 33.5% at 0, aiming for 66, the lowest you will ever get is 0.96. But obviously, you already have zones below this place. And the moment you start having zones below this place, the higher the risk, the higher the reward to the risk ratio you have. So this is it. Supply and demand is actually very easy. And it's one of the strategies that you could just hold on to a trade and even make way more than 2, 3, 4 risk to reward ratio if you hold on to a trade longer, right? As long as the fundamentals fall in line with the way the market is going to keep going, you have a big chance to win. And the technical setup on its own is also so clear, very, very clear. As soon as you see it, it just doesn't feel any way different. You don't have that fear that, oh, this thing feel against me. Even if it feels against you, you know the next one is going to work. Why? Because you are fundamentally backed up. Now, this is for people who also use fundamental analysis as a filter. If you do not use fundamental analysis as a filter, I'm sorry, then this video is not for you. Because I personally use fundamental analysis as a filter. When I say fundamental analysis, I mean looking at economic data and rating it against each other to see what direction is best to trade. So my advice for you is, personally, try to generate for yourself a fundamental analysis filter. I'm going to open up a Discord and Telegram channel soon, where I will be sharing on a daily the current economic graph of the market, what the market is looking like economically, based on my certain set of calculation. Now, mind you, it is not financial advice. When you see it, it doesn't mean you should just go and buy or sell the market. No, it's saying there's a tendency that the market is moving far more in this direction fundamentally currently than this other side. So if you're looking for technical setup, you should be looking for technical setup that align with that fundamental analysis to take your trades. But until then, the name remains Nicholas, and I'll see you guys in the next one. Peace.